I am trying to unmute. There you go. Hi guys, I was just trying to unmute. I'm not sure why it was taking a bit of time, but we're all ready to go. Thank you again for joining me. I just need to. That works better. That works much better. Well, it's been a good week. I hope it's been a good week for everybody. What we are gonna do today, let me just check what's come up on the screen. Hey, John, good to see you guys. I love all the regulars. Please keep all the questions going. So it's been a good week. Excellent, not too bad this week. I like that. Fantastic. So what I want to do, guys, I'm just going to skip a little bit of the usual intro that we do. I just don't want to be rushed on sharing with you reversals at hidden levels of support. So let's move the screen. We have spoken about major trend reversals, and something is just creating that. I thought I've resolved it. Let's try. Yep, that should be fine. So reversals at hidden levels of support really give you an opportunity to find new trades. The major trend reversals that I showed you, something is interesting happening on the euro there. Is there a news breakout? Is there news happening? 11:30. I just want to check that quickly because I think that's fascinating. Nothing. Okay, let's refresh that. Oh, it's okay. All day euro Italian bank holiday. So that shouldn't be causing a move like that. But in any case, so that's something that's exciting that we're looking at. I was just checking the news to see if there's anything that we should be looking at. So back on the euro, let me just check that my screen sharing is up correctly. But anyway, I don't want to spend a lot of time here. I want to look at reversals at hidden levels of support. So we have spoken about major trend reversals, and we spoke about the key things you must look out for. The most important thing is that you need to have a trend, okay? And when you have a major trend reversal and you're in a particular trend, it's pretty easy to see that I am in a trend. So I'm expecting a break of the trend line, etc., etc. Now, when that happens, that's the bread and butter trade. You must take that trade and see how far it goes. But we also get these reversals where you're sitting and looking at your chart, and you're like, how do I get into this trade? What strategy should I be using? And the market starts to move and unfold, but you can't get into a trend. So, for example, if you are looking at something like this, and you kind of saying to yourself, man, should I be trading a trading range because of what I see here? The market has gone up, it's come back. I'm confused. I don't know what to do. I don't know where to take my trade. Well, there is opportunities that you can find to maximize the market. And that's looking at the hidden levels of support. Now, remember, we have discussed two core types of hidden levels. One is a measured move. So whenever you have a trading range, you must just get into the habit of just sticking a measured move in. Now, whether something turns there or not, what you want to get used to whenever you see a trading range, just go to this Fibonacci retracement tool, and I think I shared with you how to set it up. So where is the nearest trading range? And you say to yourself, well, okay, if the market breaks out of this, it's likely to come and test these levels that we have, because that's That's the hidden level of support. Okay? Out of the trading range, it will be confirmed by that. And if you got a break out of that, then fantastic, you can look to take your trade. Now, what we're going to look at is if you see that and you haven't found a way to, I'm not looking at trading ranges. So that's a different thing altogether. And there'll be ways to get into this. But if you haven't found a way to get into this, then you're saying to yourself, I can't just jump into the market because I don't know what's happening. It's going to get my mind all locked up. How do I get into the market? You want to look for 3 pushes. Now, a 3-push pattern is a triangle pattern, is also called a wedge pattern, but they're not always perfect shapes. So what you need to look for is a perfect shape. I'm going to leave this and come back to this when we come to the end, because it's a variation. It's a little bit more complex, but we will cover it today. So let's just flip back. I had 131 May, that's yesterday, right? Okay, so let's have a look at this one. Now, we come into the market and we kind of look and say, well, early morning, I'm gonna wait. I always, when I'm trading the Asian session, the early morning for me, just an hour after the open is fine. The market would be now providing me good information. Without all the server changes and all of that stuff. But you get in, and let's assume you haven't taken a trade. Now you're saying, I've got to find a way to get into the trade. How do I get into the trade? Now I know George has spoken of all these measured moves. So here the market went down and come back. So if the market breaks out of this level here, so it started here, came down. If it breaks out of this level, I'm expecting that the market will make a measured move, because now we know the market makes measured moves, right? So you take your Fibonacci retracement, and what you always want to do, here's a good, I think I've mentioned before, even when we're talking about take profits, always aim for the earliest profits. Okay, always aim for the earliest target to give you an indicator. So if you are in a trade here and you're saying there is the measured move, where is the nearest measured move? Well, the most significant lower high out of this was here, where we had a breakout. So we want to say if I break above that particular lower high, then the bulls have got strength. I think they'll go to a measured move. If the market continues to move up further, then you say, okay, where's another level? That could be another level. And you just move that up and say, if they break above that, the market will fall. If the market continues to move up, maybe this is significant. But always aim for the earliest profit first in terms of taking your profits and seeing how the market reacts. So forget about the fact that we are in a trade here. I'm trying to say, you want to say, well, how do I get into a market? I come in and I've missed the move apparently. Or, I've seen the market has gone up and I'm not in it, but I'm still here for the rest of the day or the rest of the session. So the measured move says we should get up to that level. Now, when you look for reversals at hidden levels of support, you need to look for 3 pushes, a wedge pattern, a triangle pattern, 3 distinct pushes that occur before you get to that level of, in this case, the level of resistance. Now, it could be beautiful like this, nice and easy to clear, or it could occur with a lot less separation of candles. If that does happen, you are looking for 3 pushes leading up to that level. So here we had the first push up, so it's as simple as that. The market went up, market pulled back, tried to go up again. Why are we looking for 3 pushes? We're looking for 3 attempts for the market to accelerate beyond, in this case, this hidden level of resistance. So first attempt failed, okay? Second attempt failed, third attempt. Now, we've not combined the strategies, but you know that there's ways that you could trade each of these, okay? But this strategy reverses at hidden levels of support. When you see that happening, 3 pushes in an attempt to break beyond that level. When that happens, your mind should be saying, okay, I'm creating a hidden reversal at a hidden level of resistance in this case. Then all you want to see the first strong close, that's a candle full body, not a doji or anything like that, but a full candle closing beneath the moving average in this case. There's a bull. I think I've got a couple of examples where it becomes a bull move, which will be closing above the moving average. So once you see that strong close beneath the moving average, what you want to do is put an order. We're not trading in the market. Put an order beneath that, minus 1 pip, whatever that you use. Put an order beneath that. Your stop has to go at this level. Okay, that's a technical level, which is close to that, or just above the hidden move, the hidden level of resistance. So anywhere within there, but it can't be. You can't put it above there. That's not the right place to put it. Put it above there. Put your order there. If you get triggered, then wait. Market could accelerate in a direction very quickly, all the way down, or it might pull back and create a lower high. That's perfectly fine. You stay in the trade. You don't jump out of that particular trade. The goal is to get right somewhere here. We try to see if the market will test the low of this, the beginning of a move that created the hidden level for you. Now, you can also look out for another hidden level that I just spoke about. Leg 1 equals leg 2. Remember that? First leg of the move, pull back, and you say, well, the market might get to the second leg, which means the height of the second leg from here, end of the pullback, is the same as the height of the first leg. Okay. When you get 2 levels of when you get 2 levels of measured moves, always aim for the most conservative. Always aim for the first one. I do that so that you can take profits early. The market breaks above that. If you've left a little positioning, good. If you haven't, there will be a pullback or something else to trade. Okay, so 2 types of measured moves. You may not always get an opportunity to see leg 1 equals leg 2. It might be just a strong breakout and very small pullback. That's fine. Use whichever measured move works. So there you take the trade. You're aiming to get down here. That's it. You're not aiming for a break beneath this and then a measured move. If that happens while you're in the session, fantastic. You can get into the trade again. When you see this kind of pattern taking this reversal, I prefer to take maximum profits out. Just take maximum profits out. Sometimes the market carries on, breaks beneath that level with force. Then I just wait for my pullback, and now I'm looking for the pullback to the 10 EMA, with the breakout and take that. So that would be your call. So just to recap, you need to see the measured move. I think last time I told you, if you're not clear about, George, where do I put the measured move? If you can't clearly see it, just click the line chart. Okay, so the line chart will have said to me, remember it's based on closes, and the close is one of the most important. It is the most important price on that candle. The close. Where did the market close? Okay, so there is a low. There is that other lower high close. Excuse me. So you'll be saying the market breaks above that. That's a potential measured move. Okay. Now, this leg 1, leg 2 would obviously put it in after the move, but you're trying to find a way to get into the market there. So you might say, listen, I don't know how to get into this. I've seen my measured move. I'm just going to wait and see what I get. So you're waiting, you come back and you check, and you see, oh, okay, there is a pullback there. So maybe that could be leg one, leg two. So I'm expecting if this strategy is going to work, the reversal at hidden levels of support, I'm expecting to be able to see 3 clear pushes up. That's a wedge pattern. Anything with 3 pushes, a wedge pattern. Sometimes a classic, they would give you a classic pattern. Well, what I call classic is when you can actually see a wedge there. And if you ever see that, then you just say, listen, I'm just going to take this. And this, oh God, okay. No, let's just do it in case. One, two. Okay, you see something that's in good wedge, that's straight. So that's easier to see. Sometimes the line chart is easier to see. So use that as much as you can. Even if you're seeing things, just put it up and see, okay, let's close this, that'll help me. Because, computers, algorithms are probably looking at closes. Okay, you see a 3 push pattern, fantastic, and all I am waiting for is a close beneath the moving average. You could say, see the first close, let me wait for the second one. The market could end up being down here somewhere. Then by the time you decide to get in, your stop is up there, your risk is quite high. You get into the trade, you might start to pull back and you panic because it's pulling back, but it's also make it a lower high. And a lot of things can happen. Just take the trade there, put the appropriate stop, and then wait and see what happens. So that's the first one that I had for you. Let's just move back. 28th May. 28th May was interesting. Okay, oh, this is good. Okay, I should have made that note. So here we found an opportunity out of a bull move. Okay, it's a bull leg in a large trading range, but we found the opportunity to then go short. You'd have gotten in, if that's less than 1 tick, if you have not been triggered into that, then don't worry about it. Wait for the next full bear candle and put the entry in there. That's one with the way to put in there, and I'm sure there you'd have been triggered. If you hadn't been triggered there is nothing else, nothing that you could have triggered you here. You'd have to wait now for a lower high. You can put your entry beneath that if you have been triggered there. If you hadn't been triggered there because of that 1 pip thing, you try that one. And then, interest enough, here is still more of a pullback from there. So that's a 3 push pattern, 1, 2, 3. So a wedge pattern pullback, lower high, still off the strategy. There is a trade you could take there. If you want to take that, wait for the close beneath the moving average. So all of these, if you had missed one of these, the legitimate trades to take, and you're still aiming to get here. Okay, that's where your profit will be a little bit above that. Even taking some profits here. What's interesting about this, you had a bear breakout occurring here, pull back, try and take one of those trades as well. Not really beautiful response off the 20 EMA, but you can take that stop above here. Your profit still remains the same. So that would have been a good time to wait for. I don't know how long you have waited for that, but wait for that kind of thing. That's fantastic. Now let's look at something else, a bit of a variation that formed here. Okay. So you at the UK Open somewhere within here. So you'd have come and looked at this and say, man, where could I have traded this particular thing in the group? Not found a clean way to trade. Let's look at this one first. I'll look at the other side just now. So you come to this and you say, okay, UK market is opening. how can I get into the market? I'm gonna say if the market breaks beneath here, okay, I'm not taking any of those trades. There are ways to trade this, off the moving average, etc. Good trades we've spoken about before. But we're trying to look at reversal with hidden levels of support. And you kind of say, well, I'm just going to wait. I'm not clear, or, I want to wait for the reversal. I came in late. I came in about here. I'm not going to jump in. I'm not sure what's happening. Let me wait. You see, there is a measured move. The market breaks beneath this low here. Market breaks beneath this low, it might make a measured move down to here. And if it makes a measured move, then I'm going to look to jump into the trade. So what happens? There is your level that you are watching. As the market is getting down here, first you see that's a little bit close to this breakout for me to count it. But there's a first push down. Market pulls back. There's a second push down, and we get to that level. So I don't have three clear pushes. So at that stage, when the market went sideways, I'm doing nothing. But there's an attempt by the bears to resume the selling, and they create a third push. So they've created a lower low move beneath the hidden level of support. So I'm happy with that as a third push. I would have liked it to be nice and clean like we saw earlier on, all happening up to that measured move. So possibly, it's one of those lower probability of these trades. But something the market is seeing that I'm not. But I'm still going to hold on to the first. It's 1, 2, 3. If you counted that 1, 2, 3, you would have been happy. But it's a subjective thing. That's just a breakout beneath that. Market could turn there. So there's the first push, second push. And what we get here is interesting. We have that low. So you see that low there. Now, if the bears are strong, we're going to put a breakout beneath that low, which is that candle. They're going to put a follow-through candle, no matter what size, but a decent full-body candle, and then a pullback, and then they could carry on. But they failed to break beneath that. So I'm saying, okay, so that's possibly my wedge pattern. 1, 2, 3, failed breakout beneath this. Now, when I see that coming out of here, I'm just going to wait for a close above the moving average. My stop, I know where my stop will be. And that's where my entry will be. And I'm aiming to get, so this is a significant lower high. Why is it significant? Because they breakout out of that and then they follow through. So you could aim for that first one or that second one to take your profits. Or if you take early profits here, you have to just wait and see how much more you can get out of there. But because you're seeing this fantastic, but you gotta look to the left because you're taking the trade here. That's what's giving you the confidence. You're saying, all right, if I take the trade somewhere here, I can get 1-to-1. When you get to this lower high where we had the move that led to the breakout beneath that. So that's a good enough return on one trade, 1-to-1. But there's still potential to get to here, and there's potential to get to here. So if the market does move to there, there's a little bit more profit that I can take. So if you are in the market and able to manage your trade, then take some profits, take 2/3 out of the market, take half out of the market. At that point, that juncture you take out the profit, you can move your stop up to that level. Okay, that's a key level to move your stop to, because the market went up and came back, tested move average, then it broke above that level when you took your profit. So that's so that profit you protected. Whatever you've left, a third or half or a quarter, or whatever you left to the market, you protected it, and you're trying to get to that level. Depending if you set it there, just above that, maybe safe. If you set it just below that, you can see. I mean, when things like this are happening, it means profit is being taken out of the market, right? So nothing is a surprise when you look at the market, each bar by bar. When you see these dodges being formed, what's happening? Bulls are trying to break out, but there's bear selling. There's another attempt for the bulls to break out at that level, more selling, more dodges. Most likely it is profit taking. Guys like you who've traded from all the way down here say, hey, it's time to take out a bit of profit from the market. Okay, so you can take the remainder of your profits there if you want, or if you're still aiming for that, that's what I'd call the maximum profit. Okay, so if you want to hold for the maximum profit, that's somewhere here, and just take out your profits out of the market. So, point to note here, we still got our 3 pushes, but we had a lower low third push. That's a variation that you need to bear in the market. So similarly, when we trading ranges or major trend reversals, when you're looking for a double bottom you get your double bottom or your double top, and then remember I said if you got your double bottom, now you want to wait for the higher low double bottom. Sometimes you don't get a higher low double bottom, you get a lower low double bottom. So the market tries to make one more move down. So don't get dismayed with that. Start to think, okay, if a double bottom or double top fails, and the market does turn with a lower low or higher high, it's just a wedge. It's just a 3 push pattern. So double tops, double bottoms can be followed by a third push in the same direction. So keep that in mind. That's pretty significant. Okay, so there's a third push variation, 1, 2, 3. Fantastic trade to have taken. Now, just a little bit earlier, let's have a look at this. Here in that's after the Asian session, that time before the UK session opened. So again, you could have said, okay, it's going sideways there. The height is pretty low for me to take any trade. I'm going to wait and see if I get an opportunity to trade. So what you see is the market breaks above that level. That's how far it will go. Pop your line chart in and say, oh, okay, there's something else that the line chart is showing me. Let's keep our chart uncluttered. That low. And say, well, okay, the market breaks above that, and it gets to here with a 3 push pattern. Let me see what I get. Well, we didn't quite get a 3 push pattern because if you see, with a double top here, but that's within the measured move that you're trying to track 1, 2, and then we got to the high. Now, what happened when we got above that high? You can see that above that high, there's 3 pushes that have formed. Okay. Now, something to take note of. When we're looking at 3 push patterns, we want to identify these 3 push patterns before the market enters into a distinct trading range. Okay. Now, that's so that in our mind we have a clear separation of strategies. We want to identify the 3 push patterns before we get into a trading range. So we want to say that's our measured move. I want to see my 3 push patterns forming somewhere within here. Once the market starts to go sideways, yes, I can see 1, 2, 3. That's a different strategy. Now I'm looking at trading range. Pull back to the EMA. That's something different that we talk about. As you start to put all these strategies together, you can quickly trade a few things. Say, oh, okay, it's not forming as a reversal hitting support level, but market is going sideways. It's now a trading range, double top, lower high. You can get into trade like that. But for now, you just want to zone in and focus and be good at a particular strategy. Okay, then I've got another one for you. Still in the euro. Just have to focus on the euro. Okay, now this one is pretty interesting. So you're in the market when the market opens and you're waiting for things to become clear for you. And you're going to look and say, where exactly do I get into the market here? You then get this bear candle, almost a double bottom, not quite a breakout, but you get the breakout candle, follow through, pull back to the moving average. That strategy, you could have traded that, stop above there, and you're going for. So I told myself I want to look at other strategies, but when there's kind of show up, well, let's show you anyway. Okay. So it is a breakout, follow through, breakout beneath that low, follow through, pull back to the 10 EMA. You can put your entry beneath that, but you're only going as far leg one, pull back leg two. That's what you're aiming for. That's nearest profit. Alternatively, oh, I was just checking, am I live? Hi guys, I think I dropped off here. I'm not sure what happened. I ran into this bad connection here. My apologies. I'm not sure exactly where I dropped off, but in any case, I was just talking about the opportunity that presented itself here. Let's just talk about that. Okay, thanks guys. Thanks, John. Okay, so there is that opportunity which you could have taken in that Asian session, and if you had done that, eight, that's one-to-one trade, pretty easy in that early morning Asian session. So I think one of the points is pattern setup every time. So don't ever despair that you trade in one story, one particular market or whatever. It does not matter. Strategy is set up all the time across all markets. I trade all of them actually. Just depends where I am and what's happening. So assume you hadn't taken that in any case. When you come into the market, sometimes say, okay, how can I trade the market? What can I actually do to get into the market? Where is the opportunity? When you say to yourself, I'm going to show you the open candles, as I call it, and say, okay, if market breaks above that, there is a potential measured move. Okay. Quick snap on the line chart. You could say, okay, just a little bit more refined. The market breaks above that. Let's have a look and see how far we can go. Now, when you saw that, and you're not in the market, okay, let's say you come in here somewhere when you've seen that, okay, then you're going to wait to see if you get your three pushes. But let's just go back to the guys who are in the market. So you've kind of missed that trade, and you're not quite sure how to get into this particular trade. Well, there's your measured move. So then you're gonna want to wait and see how else to get in the market. Okay. So we do have a breakout, we have a pullback to the moving average. When you look at it and say, okay, I'm not quite happy with the way that looks. If you do take that, for whatever reason, you shouldn't trade above the doji, but if you do take that, remember your stop has to be in the proper technical level. Stop should be here. Okay, that's the optimum stop. If you want to be ultra conservative, put it down here. But when you see that, leg one, leg two, it's within a trading range. Okay, and it's right there. I wouldn't take this particular trade for the simple reason that I'm at this double top here, and that's the height of where I'm saying the market breaks above this. I might be able to get there. So it's broken above that. Now you want to find ways to get into the market still, okay? Because it didn't just give you 1, 2, 3, but you want to get to there. You look at that and say, hey, that's not a neat one to trade, but it's still a higher low, right? Look at the next one. Okay, setting up again. Not need to take that trade. And then you're waiting. And then you see a third one. Oh, what do you have? Okay, 3 pushes. Okay, so this is one pullback, second pullback, third one. That's a wedge. Wedges are pretty powerful in any setup to be looking for. Okay, so in this particular case, we're trying to get in. Hey guys, if you stayed, let's just make sure I'm unmuted. If you stayed with me, thank you very much. I realize what's happened now. Those couple of blinks we had was alert from our power utility for a power cut. Can you believe it? This is in South Africa because we're going through winter. There's a lot of power cuts and load shedding. And ours kicked in at 12. So the generator has just kicked in. Actually, my bit of oversight, if I checked my notes from the secretary, I probably would, I should have run a mobile device. So my apologies, guys, but you can probably hear the generator in the background, but let's keep cracking on. There are some of the challenges. That's why that's why you need to put a stop in the market, right? Whenever you take a trade, you might get a electricity power cut. If whenever you stop and things go wrong, it could be a bit of a spot. In any case, so three push patterns when you are looking for an entry into a strategy is very important. So whether I did my double bottom looking for higher low and things are not clear, but I see a three push pattern, then you must execute. So here is where you look to get into your trade. You might not want to get in above that bull bar there, but you must get in above that. I mean, you definitely need to put your entry above that. And remember, the stop is down here, and all you're aiming for is to get there and take some profit. So market didn't quite get there. If you'd gone a little bit below that, might have taken some profits out of the market, but you still keep your measured move in because you are saying, I want to see what happens when the market gets to the measured move. You know, John, I looked at your note. Well done, buddy. You know about generators. We still have them even now. So you know that's where you take your trade, take your profits out of there. Now look at what happened when we got to the measured move. Okay, so that's the measured move. Forget about the fact now that we've taken profits from the earlier trades. Market go to the measured move. We know it's profit taking at that stage. I mean, if the bears do carry on and sell and get a breakout, that's a different story. Then we get a double top. So we had one push up, we had another push up, but it's all at the same level. So I'd consider that as just one push up for the purpose of me trying to find an entry into the trade. Okay. Then I get a second push up, and I get a third push up, and a fourth push up. Okay. Fantastic. So that's all variations of the wedge pattern I'm looking for. So all I'm saying now, after I get 1, 2, so I get that first one, second one, third one. From here, I'm saying if the market now gives me a close beneath the moving average, I'm going to take it. Okay, but we don't get it. We have another attempt to break above that. So maybe what the computers were saying, okay, this is profit taking. So there's the first move, second move, third move. But you kind of say, well, why is it like that now? Why? How come it's not clear? But everything is always clear. So the thing about price action trading, you get quite busy. So once you have that double top, you have the trading range. So you're kind of saying if the market breaks above that trading range, okay, it's likely to get to a measured move. Quickly throw a line chart in. It gives us a little bit more refinement based on closes. Why am I putting that there? Because there is, forget about what's happened here. When this happens, that happens, what you're seeing is a double top. And you're saying to yourself, okay, if the market breaks above that, it's likely to go to a measured move. I got to my measured move here. I didn't get my 3 push pattern, but I'm not giving up on it because now I have a trading range. If it gives me a lower high double bottom, I'm going to trade as a trading range and just sell with it. But at this particular stage, what if it gets up there? So now we have another second hidden level of support. So what we're looking for, if you hadn't seen this and put this measured move in, you still hold on to your thesis that there might be a reversal at the hidden level of resistance. Okay, there's my first push, second push, third push. Okay, I didn't get anything. I get a second one. Oh, what's going to happen? Oh, I get a close beneath the moving average. You gotta take a trade. You have to take the trade. Close beneath the moving average, stop above there. If it turns against you, usually you can manage these kind of setups. Very rarely does it just a bullet against you and knock you out at the stop. But now, okay, so that's one alternative if you hadn't put that. But if you sit there and say, okay, George says every time you see a trading range, stick your measured move in and see what happens. There is a potential trading range. You could mark it on those double tops, or you could check in your line close and mark it like that. You say, okay, let me wait and see what happens. Then what does the market give you? The market gives you a classico, an El Clasico, as I call them. 1, 2, 3. Now, that's clearer than what you had before. And if you see that, remember, you're not taking the trade up here, guys, even though that's a decent reversal. You have to see the close beneath the moving average, and the close beneath the moving average has to be by a full candle. Almost, you don't want a doji, you don't want this kind of candle, or that kind of candle, or this kind of candle. You want to see a full candle. Why? Because the moving average is the average price that's been reigning for the past several hours. And if we close beneath it, at that point, those closes are important. The market saying we are agreeing that the price was too high, so we need to go lower. Then you just put your order beneath that and your stop above that, and you're aiming for here. Okay, you're aiming for the low of the nearest trading range. Okay, there you have taken the trade. Now, why the reason this strategy is so important is if you only have the major trend reversal. There was a time I only had that, and I'd get so frustrated. I'd say, okay, there's a trend, break off a trend line. What does major trend reversal say? It says once you break beneath the trend line, you want to wait for the pullback, a test of that, then you want to wait for lower high. But this thing moves, and I would see so many times it would just move without me. And I was sitting and say, but I need to get into this market. That's when I started to see and combine, these reversals. I would always see the reversal of the moving average, but not know why things are turning. But now I know if I see a 3 push pattern at a hidden level of support, or like here, 3 push pattern is still an attempt to break above the high, then I see a close beneath the moving average with a decent sized full body. Let's correct that, with a full body candle. It's not about the size of the candle. Okay, so even if it was this candle, the market was here and it closes, you just have to take the trade, put your stop at the correct place. That's what you're going to do. Okay, let's squeeze in another. Hopefully, we can squeeze in a couple more. 26 maybe. Okay, here's another one. So you kind of come into the US session and you're saying, well, okay, how do I get into this market? If I look at where it's come from, test of moving average, but it's not neat. I'm not seeing a decent enough breakout and pullback. It's hugging the moving average. It's going down pretty slowly. A lot of things happening, but it's not going down dramatically. I just can't get in. I have to find a way to get into the trade. Then you see that, and then the market starts to turn dramatically. And what you got to say to yourself, it's turned that dramatically. Where you can't take a trade here because it could be just be testing the low of that. So you need to wait. But when you wait, what are you waiting doing? You're waiting to see what's going to happen at a hidden level of support. Okay, so this has happened. There's a low, that's quite dramatic. If the market breaks beneath that, then I'm expecting that you might get down here to my hidden level of support. Okay, and if it gets down there, then I'm just going to find a way to take the trade. So yeah, in the US session, time is against you because very rarely on a 5-minute chart do I allow my trades to go through into the next day. Because if I start to do that, then I'm trading the daily time frame, right? Then I need to go to the daily and see where the stop is. Is that where my stop was? But we trade the 5-minute time frame, and the day ends, the days ended, then we can wait for the next day. So you need to bear that in mind in the US session. Doesn't mean don't take a trade, just manage it, until things get to the close. You can say, okay, let me close it. If you're going to take the chance to carry it on, I said very rarely, I've done it once or twice, I haven't done it this year at all, then all you want to do is tighten your stop at a technical level if you're taking a trade for a good strategy and wait. But we're not talking about that. So measured move. What happens when you get to the measured move? Well, this is interesting. Look at that. We've broken beneath that, again, for measured move. Market starts to do 1, 2, 3 push pattern, not quite close to it, but it's there. I can see it. I'm not going to ignore it, because if the market turns and gives me a close above it, I'm trading it. Okay, because that is a 3 push pattern. Let's put the closes in. Okay, the closes are pretty neat, right there. Okay, 1, 2, 3. So the market was to turn here and give me a close. I'm going to take a trade, put my stop here. So what happens instead, again, we have an attempt to break beneath the hidden level of resistance. Okay, I mean of support, sorry, because it's going down, the hidden level of support. And you go sideways. So essentially that becomes like number 1, that whole 3 push pattern is first pushed down, which was subdivided into 3 pushes. So price action can get quite exciting when you start to notice these things. I call that my first push, but it's subdivided into 3 pushes. There is my second push, and it's also subdivided into 3 pushes. 1, 2, 3, also double bottom. Well, let's see what happens. Then I get a third push. Okay, so I get a third push, fantastic. If I get a close above the moving average, I'm going to take a trade. But why should I take confidence, be confident in this particular push here? Because remember, every time you see a trading range, you have to be putting in measured moves. So there's a trading range. Clearly, the market went sideways. If you broke beneath that, attempt to break it to get to a measured move. We did get to a measured move, profit taking, bang. So I get my first close. That's where I'll take a trade. Running out of time, so that could be a problem for you. But you take a trade. Why do you take a trade? Because on the close, you might get an attempt. I don't know where the open was. You might get an attempt to get to the open to create a doji, or it might even come back to test this low here in a few bars. The setup is there, so we take the setup. Stop is there, might get up to there, but it doesn't. It goes sideways, and at some point you gotta say, okay, I'm just gonna close a little bit of profit, a little bit of loss, whatever the case may be. Let's check. Do you enter trades? Yes, definitely, John. I take many trades in the US session. And the reason I do that, and when I most likely do that, is in the overlap between the open of the US session and the close of the UK market. So there's that 2-3 hour zone when the volumes are in the market. The London session is still open, the US is opened, and I manage that, and we can talk about that at some stage. So typically my time, which is so to be, let me just double check that. So about 3:30 my time. So we're talking an hour difference with the server. That zone up to 6 p.m. my time, which is 5 p.m. Because of the -1 at the moment, 5 p.m. UK time, London time. That zone plus an extra 2 hours is a very good time for me to take trades. If I don't take trades, then typically, don't tell my wife when I can squeeze out of home duties. I want to see what happened in the last 2 hours of the US session, because the day is coming to a close, and there are good trades there. You look for reversals, or you look for breakouts. Sometimes you get decent up trading ranges. Sometimes when a doji is created on the daily time frame, it could be created in the last 2 hours of the US session. So there's always good trades of the US session. If you get a chance, look at when the market overlaps, when the US market opens, right up to the close of the London session and a couple of hours then. Then you can always come back just before the US session closes. So what we do, depending on your time frame where you are actually, you could look at taking trades in the last couple of hours of the US session, then hang around a little bit, give the change over, save a couple of hours or so, not even that, an hour or two, and you might find a few more trades in the open. So you can easily pick up trades and make some money there. Yeah, okay. I'm not sure about your time frame. I'll have to check that out. But if choose whatever session you choose, they are good opportunities. That's my experience. I used to think at some stage all the trades are in the London session, but when I started getting up and looking at time frame, I'll tell you why I used to think that, because at some early stage I used to say, unless the market has created a range in the day of at least 20 pips, I'm not going to trade it. And that kept me out of the Asian session, kept me out of the sometimes out of the US, and I just focused on the London session. But then when I started digging into price action, man, I was amazed at the opportunities that you can just get in, pick up 1%, and you're done for the day. So do not give up on that. So 26th May. Okay, I had one more to show you guys. Oh yeah, yes, another one. This is a different session, right? This is actually I'm glad we spoke about different time. So this is the Asian session. So you kind of look at it and say, hey, I don't know what to do here. Or wait to get a double top, I don't get a lower high. Man, what a bugger. Then the market gets down here. Now it's turning. Good news. Now it's turning. You know what to do. Okay, there's a high, there's a low. Now the market is turning, so you're waiting to see what happens when you get to a measured move. Okay, closes, gives you tighter moves. Okay, so saying, okay, now I'm in a trading range. I mean that high, that low, the market is moving up. This is a trading range. There's nothing to trade here because market could create a double top. And I look for a lower high, then I go. But then guess what happens? Towards the measured move, market goes up, pulls back, creates a little double top, 2, 3. Okay, 1, 2, 3. That's a wedge, or you could have said that. 1, 2, 3. That's a wedge. And when you see these entries, you don't want to take, right? Even if they're decent, because you're getting close to the moving average. And you've already had a leg 1, leg 2. It's pretty good. The first leg of that move. Pull back. So all of this is happening at the hidden level of resistance. Okay. So you get a perfect, guys. Perfect 1, 2, 3, whichever way you look at it. Then all you're saying is I'm going to wait for the first close that's going to happen beneath the moving average, a breakout of a moving average. Now, this got all the classics that saying, please trade me, trade me. There is a close beneath the moving average. You got to take that trade, guys. Put your entry there, you get a dodgy, you go, but who cares, right? The stop is up there. So if you had just done that and said, okay, I'm going to aim, remember I said we aim for the higher low for me, the decent one that we see, that's one. You could have taken a 1% out of there, okay, which is fantastic. Take your 1%. If you try to aim for that, you always go a little bit above. You might have been missed out of here. Fantastic. You might have closed the trade after that. But then what else do you see? Now we're talking about building a position, which was asked some time back. There is a clear breakout that we want to trade, but we want to wait for the pullback. There's a breakout, pullback, and there's the first pullback. You're saying, okay, if I get a trade to get in there, I must take profit. So you've already banked 1% here. Okay, then you get to see that, don't take that because of it's a bounce off the moving average, but don't like the color of it. The base or story, just give me a big candle that makes me happy. So you wait, and market tries to break out again. Decent reversal of the 20 EMA. Remember what I said? If you just wait for the 20 EMA, that's it. That's all you trade. You will pick up a decent trade. There is your trade here. So definitely want to take that. The stop is up there, 12. And want to aim for here. I mean, can you see how precise the market is? That's a 1-to-1 and the market 10. So guys who took that trade took 1% out of the market. Easy, crystal clear. What makes this even more beautiful, besides a decent reversal candle, is that it's a lower high double top. You'd have taken your reversal at a hidden level of hidden resistance level, made your 1% within there. Okay, take all your profits out because that's the strategy trading. Then you see the breakout. So let me see what happened. Then you get that, take your trade in, bang, you're done. So that's a pretty good trade that you have done at 2% easily. So guys, thank you very much. Thank you for hanging in through the power blimps. We'll have a different approach next time. One round of another dongle. But thank you very much. And if you want any need to cover anything in particular, drop Angel a note. Otherwise, I'll just share with you what you want to cover as you go through. But sincerely appreciate your time, and we'll catch up next week. Thank you, Angel. Thank you guys in the office. Appreciate it.